So here we are, July 28th, 2022, and I got the SPY 5-minute candle day chart for SPY. So we see we pushed in pre-market and then quickly sold off and bounced off this 200 SMA and set a low a day at 398.15 before quickly reversing and melting up into these Apple and Amazon earnings that pushed us ultimately up to around 409.75 cents, almost 410. So when we pull back to the 10-day chart to get a better feel of this, how extreme of a move we've made off this July 14th low a day around 371 on SPY to 410 on July 28th, representing a 10% plus move in 10 trading days. So to get an even better feel, we'll look at the daily candle chart, 180 day. And we can see the high we set in the all-time high in January. And then once we broke under this 50 SMA and formed this downtrend channel, we've been in since. And we can see we did actually set a higher high at one point and broke the 50 SMA and the 200 SMA. Topped out at 461-ish, 462, and then sold off quickly down all the way to 380. Back down to this downtrend channel. So that's kind of worth noting because look, we're at about the exact same amount off this 50 SMA as we got on that push. So, and this time we haven't even broke a higher high. So technically, to break out of this long-term downtrend, we would have to push over this 417.50, break out to like 418 and higher and hold it to technically break out of this downtrend. So right now I think this is a retail bull trap, and we'll go over why. I mean, first of all, let's look at this RSI. When we look at the level it's at right now, it's exactly the level where we topped out on that previous 50 SMA breakout, as well as the top of the all-time high. This is where the RSA likes to top out at recently. Similar situation on the MACD. Got a little higher here, but it topped out right at the same level here. So when we look back actually even further and look at the 5-year chart and get a better feel for the bigger picture in reality, we look at the mean on the SPY and the SP 500, which is just tracking the S&P 500, as we all know. It would push us all the way down to around 335, but with time it will rise to around 340, maybe even 350 by the time we get there, I suspect. So I'm looking for a 355, 345, maybe lower pullback. As for resistance levels, before that 417.50 new high test, we got 408, which we're over right now in after hours, but 408, 408.50 level is going to be heavy. The bottom of this candle, this daily candle, nearly the bottom of this daily candle, the top of this daily candle. So I suspect that to be potential support or resistance tomorrow in the intraday hours. Above that, we got 411. That will be heavy. From the bottom of this candle, the bottom of this candle, and the bottom of this wick. Over 411, the next one will be 415, which is the top of all three of these candles. Some wick action there in the bottom of this candle, the bottom of this wick, and the bottom of this wick way over here. So 408.50 to 408 will be heavy. Potential support or resistance 411, 415, and then we got that 417.50 test. That's the top of this candle and the bottom of this action. Above that, the psychological 420, and then it will be pretty light till about 425. But let's not get too ahead of ourselves. I don't think we're gonna push much over this 411, 415 area. Might test this 417.50, but more likely head back down, which we'll look at. Let's see the support levels underneath. So 496, the top of all these spikes, and support right here. Support here. Under 496, we got 493.50, which was the clear support here, as well as all this action and the resistance here. Under 493.50, we got 490, which was where we bounced that support here and was resistance previously on these two pushes. Underneath 490, we got 386. We'll say 387. It's the bottom of this, the top of this, and the top of this action too. Underneath that, we got 485.50, which is the bottom of this, and the top of this, as well as the top of these. So under 390, we got 387, 385.50, and then here's the big one. This one, I saw algorithm for so many days on this, just pinning it to 383.50. You can see it here, this action here, bottom of this action, and then under 383 would be 382, 383.50. I'd say it's 381-ish would be the next support level. So under 390, so it's 396, 390, 350, 390, 387, 385.50, and 383.50. Yep, and then 381. Those are the support levels downwards. The macro news first. So pretty much Pinocchio Powell, aka Jerome Madoff, he cowered. He only raised rates 0.75% instead of the even still wimpy 1%, full 1%. So they're pushing this narrative that like these two consecutive 0.75% increases are super hawkish, but in the face of 9.1% understated official inflation is a joke. They're calling 2.5% federal fund rate a neutral rate, which, as we can see, is a monetary policy that is neither accumulative nor restrictive. To call that not accumulative in the face of 9.1% inflation is insane. That's almost nearly still 7% of real negative interest rates. So people are still getting borrowed to have access to the cheapest credit and just blow up the market with margin and build more bubbles. It's disgusting. So GDP fell for the second straight quarter, a significant amount. The White House has came out and tried to redefine it. They're moving the goalposts. As we can see, Jerome Powell is soaking it up. He's saying we're not in recession. Janet Yellen is. Biden came out today to do a live speech, dropped some job numbers, and then walked off saying, oh, that doesn't look like a recession to me. So they're pushing this narrative that if you're even having the argument whether we're not in recession or we are, you're already losing. You're already falling in their games. We are in a recession. Not only is this 2 consecutive GDP drops, we're going to have a third in the last 2 quarters or so, or even more, would have been had they not printed $10 trillion. So they just nominally hit it. We've been in a recession for a long time. So fuel companies and these are the ones that control the market as they control the top 5 holdings of the S&P, control over 25% of the S&P. So they can just control it through these 5. So that's why we'll be talking about these 5. So at the very top of today, that's causing this recent move is Amazon. So this is what's helping Amazon SPY top this out, in which I'm thinking it's the last little hoorah of earning prop jobs. We'll go to AMZN. So why is Amazon up 13 to sometimes 14% in after hours today? Yes, their net sales increased 7% from $113.1 billion last year in the same quarter, to $121.2 billion, right? So they're 7% up in net sales, but their their net loss is down $2 billion. They've lost $2 billion in this quarter as compared to making a net income of $7.8 billion. But we had to take note that there's a $3.7 billion net pre-tax evaluation loss. So even if you take that off and you give them $2 million of profit, compared to nearly $8 billion in profit with a 7% increase in sales, that's not good. They're selling the same amount of stuff and inflation is 9.1%, which we all know is understated. The net sales should be nearly that much just to have sold the same amount of stuff. So they're actually selling less stuff at a higher price, and they're making less money. And this is a common thing we'll see in all these earnings. But yet it's still up 13%. So they're making less money, and the stock's up 13%. The P&E goes up. It's more overvalued, more overbought. What I suspect is the big money has loaded a stock like this. They loaded it all during this whole time, this consolidation period, and here they are selling to the retail that FOMOs on these earnings. Don't know how to read them. They're basing it off the estimates, not the year over year, as we see on Apple, which let's pull up the chart today. So Amazon's up 13%. Apple's up 3%. It actually got up to, it traded all day for 154 to 157 range, and it spiked to 164 on these earnings. Now, right currently down to 161, but let's look at them. So this is one of the few stocks that actually beat earnings estimates all around. But estimates are just another way for Wall Street to push this narrative. When we look at the year-over-year numbers on this stock, yes, their revenue has increased to $83 billion from $81.4 billion. But their profits are at $19.4 billion compared to $21.7 billion last year. So they sell more stuff for less profits. That's inflation. So this is the final little push, and I think the final little retail bull trap we're going to see on the earnings of these last 2 weeks. But let's go over what else helped push this up into these earnings. So once these Amazons and these Apples start going, it's in sympathy. All the other ones will start moving with it. But when we look at Microsoft, they reported earnings. They missed all their estimates, sell off from 460 down to 244, and now here we are at 280. So Microsoft misses estimates, but stock's up 5%. Now it's up a lot more on rosy guidance. So it's the same stuff we're seeing from the large tech companies in the last quarter. Their earnings won't necessarily be that good. Then they'll come out with some unrealistic, out of thin air guidance and pump the stock up. And then they'll revise it once we come closer towards next earnings. So don't get caught up in this. So another one, so if you got to think, so at that point from before earnings, it was 260. Now we're at 278. We're almost 10% over after earnings miss. Google parents Apple posted weaker than expected second quarter. They reported a $69.7 billion, missing the $70 billion forecast. They reported a 1.7 earnings in share, missing the 1.31 forecast. So, again, they barely missed revenue forecast, but they missed earnings significantly. What happens? Same day as Microsoft reported. Same situation. It dumps, it comes right back up. So it goes from 107 before earnings that day to now 115 on those earnings that missed all the estimates. But even worse of all, here we got Netflix. Netflix reports earnings on July 19th. And this is what helps cause to start the this 10-day off the SPY. This started it all. Netflix goes from 174 to 226, which is nearly a 30% move. After they report they've lost 970 subscribers dumped. Because the headlines is they lost only that much compared to the 2 million estimates. But there were estimates that were 1 million, there were 2 million. Who cares what the estimates were? They lost 1 million subscribers, and this is a strange situation where they beat their earnings per share, but they lost in revenue. That's a rare situation in earnings right now. But they lost 1 million people, but here they are doing the same situation. They come out, they lose. How could they come out and lose 1 million subscribers and then say next quarter we're going to gain 1 million? You just lost 1 million. I'm not buying it. I think that's one of the best shorts in the game. Walmart came out and is doing what these other tech companies are going to do on these next earnings after dropping these bullshit guidances they're dropping right now. They lowered their profit outlook for quarter two. And let's see what happened to Walmart, which we all know how big of a market cap they have. It drops from 132 to 118 and then rallies back to 130. But the fact that it can drop from 132 to 118 in a matter of an hour or two But that type of market cap is showing you how propped up these stock prices are. There's no bids here. There's no liquidity. The minute something bad's going to happen, like March 2020, or any type of situation, or the Feds can't keep causing all this inflation and actually have to fight it, or they're going to lose world reserve status. So these stocks are not, no one's going to be ready to buy them up here. Look at the 10-year chart on these stocks. Is this a pullback? Is this really that big of a pullback? Say it comes back into this support, you get it to 135. You're buying into this. You don't got much. It's a dividends play if you could hold it, but the dividends are going to get erased by the depreciation of the shares long term. Not long term, but medium term. As we could see when we look at the SPY 10-year chart. I mean, you could try to do this uptrend, but then you're missing out on all this price action below 2016. So the long-term trend is right here. We can see it's pretty clear. Which would put us even lower than the 341. I did the one here. This represents the most support levels on this whole entire move, as well as hitting it over here as well, and it's almost near to the bottom of this. This is 340-ish. This is 320.